In this video, we will be understanding how to conduct the fundamental analysis of a stock. When we invest in any stock, we are becoming a part of the company. We would own a certain percentage of the company. So we even have to think similarly. Which businesses would we like to become a part of? And before becoming a part of any business, what all information would we like to know about the business? We have to analyze all those things before investing in any stock. First of all, we will have to analyze the industry that the company belongs to, where we will have to look at the future potential of the industry, at what rate can the industry potentially grow, and what are the threats to the industry in the future. Then we have to understand the basic history of the company, when it was formed, who founded the company, what acquisitions the company has made, and how the company has expanded and grown over time. Next, we have to analyze the management of the company, how effective it is, how they have been able to handle and manage the company over the years, and who is the current CEO of the company and what are his or her qualifications. Following that, we have to analyze the product or service provided by the company, if any. Check if the product or service provided by the company is useful. What is the quality of the product or service provided? How much demand does the product or service have? What problem does the product or service solve? And what are the reviews of them? It is important to analyze the product or service because if the product or service provided by the company is good, it is more likely that there will be more people buying the product or service in future, due to which their revenues will increase, through which they can earn more profits, which means that the company would perform better in the future. After that, we have to check how much market share does the company have, and we have to check whether their market share has increased or decreased in the past few years. If a company has a majority market share, then we can get to know whether it is an industry leader in its business. Also, if its market share is increasing, it suggests that more people are buying the same product or service from that company rather than other companies selling the same product or service, which means that the company is growing. Next, we have to check whether the company has any competitive advantage over its competitors. In financial analysis, it is known as a business moat. Does the business of the company have something that gives it an advantage or protects it from its competitors? Like it could be the superior technology they have, or they have less operational cost due to operational efficiency, or more access to data than other companies, or their brand value, or it could be anything that gives the company a competitive advantage. Then we have to check the financials of the company, where we have to read the profit and loss statement, balance sheet, and the cash flow statement. Following that, we have to analyze the company based on the financial indicators. We have already talked about 6 financial indicators in the previous video. There are more which you need to check, such as gross profit margin, operating profit margin, net profit margin, return on assets, sales growth, free cash flow growth, quick ratio, profit after tax growth, and EBITDA growth, which is the growth in the earnings before interest, taxes, depreciation, and amortization. There are other financial indicators as well, but these are the ones you must look out for, along with the 6 other financial indicators that we have talked about in the previous video. Next, we have to check whether any government policy or government regulation is affecting the company in the present time or can affect the company in the future. Then we have to check the shareholding patterns of the company, whether the promoter holding has increased or decreased. Promoter holding is the percentage of the stake that the promoters of a company have. Promoters are those entities or individuals which have a major influence on a company. Because the promoters have the most information about how a company is actually performing, if the promoters are selling a lot of their stake, then it is possible that the company might not be performing well, or their growth potential in the future is bleak. So it might be a worrying sign. However, if the promoters have acquired more stake, then the company might be performing really well and they see a good future potential of the company, which is a positive sign. We will also need to see how much stake do the FIIs and DIIs have. FIIs are the foreign institutional investors and DIIs are the domestic institutional investors. We need to see the percentage of the stake that the retail investors, which are the common people like you and me, they have. Following that, we have to analyze the company with the peers of the company, which means we have to compare the financials, the financial indicators, and the market share with the other companies in the same industry. This will help us understand how the company is performing in comparison to its peers in the same industry. Next, in order to know about the future aims and goals of the company, To know about how it is planning to grow and expand and what actions it is going to take to make that happen, go through the annual report and the investors presentation of the company. Lastly, after doing all this analysis, we have to view the chart of the stock price and understand how the stock price have been moving, and identify from the chart of the stock price whether the stock is available at a discounted price or at a high price. Thank you for watching this video. I hope that you would have been able to understand how to conduct the fundamental analysis of a stock in order to then decide whether to buy it or not. In the next video, we will be talking about the basics of technical analysis.